Whoa, do we have ourselves a builder bubble when it comes to new construction? And is new construction showing us that we are on the doorsteps of a recession? I'm going to show you data and information that you're not going to be able to get anywhere else. Do me a favor, smash that like button, help me get this video in front of more people. Make sure you subscribe, that way you're notified when new videos drop. And when you do need a realtor anywhere in Utah, remember, Denko the Realtor has your back anywhere in Utah. My contact information is down below in the description. Check this out right here. Earning results at some of the largest home builders pointed to potential challenges ahead. Both Lennar and KB Homes missed estimates in the latest quarter when it came to new home orders. Lennar is the nation's second biggest builder, by the way. So we see that they are struggling. Now I'm going to show you why this is potentially showing us a bubble when it comes to builders. Median new home prices were down on a monthly basis for much of the past year, most recent decline of nearly 5%. But this is the kicker. This is actually where the kicker comes, and I'm going to show you then why new construction could potentially be telling us that we are on the doorsteps of a recession. This gets wild right now. Look at this right here. Home builders' share prices have been on a roll. Hold on. They've been on a roll? Stock prices have been on a roll for builders? I thought that things were showing that it was bad for builders. Right here, we see that a SPDR S&P Home Builders ETF has jumped nearly 67% over the past 12 months, compared with roughly 35% rise from the S&P 500. So this ETF, and so builders, I'm actually going to show you the stocks of KB and Lennar outperforming the S&P, but yet they're having issues with their orders. Sales are going down. They are seeing price points dropping. Make it make sense, right? I mean, isn't that potentially what happens if we do see a recession? What's the potential of these builder stocks? Now, I want to show you guys, before I actually show you the stocks of what's going on there, I want to show you why this is potentially indicating that we are on the doorsteps of a recession. And let me actually remove myself here entirely. So if we look at the St. Louis Fed, this is up here, newly privately home housing units under construction of 5 units or more. So this is your apartment complexes. Now check this out right here. Every time we have a downward swing, we have a recession. These gray areas here on the screen, those are recessions. So right here, we have a recession. Right here, look, a recession, recession. This downward trend didn't, but then a recession did come. And if you take a look here in 0809, downward trend of new construction for multifamily, for these big apartment complexes, and look at us right here. We are coming down. Is that potentially indicating that we are potentially knocking on the doors of a recession? Well, that's not the only St. Louis Fed graph that's indicating that. I want to show you guys another one over here. And let me just remove myself entirely again. Look at this right here. This one goes back only to 2000. If we take a look at new houses for sale by construction completed. So these are houses that are completed and ready to be bought. Well, we see here that we don't have much data like we do when it comes to the multi-unit, because it goes all the way back to the 1970s, the apartment complexes. However, we see that the downward swing happened, but first we see this upward swing. Once this new construction completed has happened, then we start seeing the downward swing. We see that that's the recession. Well, look, newly completed is going up. So is that indicating that a recession is around the corner? And then I have one more to show you guys. So this is the graphs, right? And then we saw that builder stocks are outperforming the S&P 500, yet their news, their data, whatever they're giving their shareholders, orders are being missed, earnings are being missed. And then right here, new one-family homes for sale in the United States. So same thing. If we take a look at this, for these new family home sales, we see these recessions happening right here. And you see them at the peaks. Same thing, recessions happening. But this right here, to me, the completed, that means these homes are completed, builders have them completed and people are not buying them, is a big indicator. And this right here, multi-units. I mean, if we take a look at this, we have not been building this many units since the 1970s. If you go over here to the left, and we actually have more than we had then. And if you look at 08, 09, I mean, we have during this peak essentially 2.5 times the amount of multifamily. So they're saying, hey, we're not building as much single family. Well, single family construction is less, about 20 or 30% than it was in 2008, 2009. Yet look at the multifamily, these big apartments, way more new construction going on. So that right there could potentially be showing us with what's going on in the housing market. These downward trends are maybe indications that we are knocking at the doors of a recession. Now, the one problem is look at the amount of money that they're printing. This is what I've been saying, that either the middle class is just going to disappear or they are making this bubble bigger and bigger. We're about to hit $36 trillion on the national debt. That is just wild. And if we take a look at this graph that I've been showing you guys, they are just printing an enormous amount. I mean, look at this. Look how sharp and steep this graph is showing us with the amount of money that they are printing. So they're either really going to destroy the middle class. It's really going to be almost non-existent here in the future unless people that have bought these houses prior to the pandemic and have settled down prior to the pandemic. Otherwise, it's going to be really hard to be part of the middle class if this continues. Also, this potential bubble could potentially get only bigger and bigger the more they pump into the economy, the more they pump into all these things that are going on. That's what I've been saying. Nothing has settled. The data is not showing us that anything has settled, right? And same thing, if we look at this right here, this is the new loans of conforming loan limits. So we're seeing that the loan limits increase as they're printing more money, allowing people to have higher and higher loan debts on their mortgages. Again, that middle class is not really a priority for these politicians any longer. And we see right here that Utah's new construction grant for first-time home buyers, right here, to have $50 million of it, that's going to help 2,375,000 people. So this is something that's going to be in place right now. And then if we go over here and look at these stocks, now this right here, I want to show you guys. The stock for Lennar started here at the beginning of one year ago. It started at $104. If we go year to date, it was at $147. Well, we see that it's been hitting almost $200 and now it's at $175. Now, if we go over here to KB, look at them. Same thing. They were down at $43 and they've hit almost 86. So they've essentially more than doubled. And if we go year to date, they were at about 60, hitting those 80s. So you're seeing that they are just growing in their stock values, yet the information that they're receiving on their earnings calls to their shareholders, it's not indicating that the stock should grow that much. And then if we go over here and we look at right when the sales were the highest for new construction, let me see if I actually pulled that up. I thought I did and maybe I didn't. Let's see. So I did not. So essentially the sales for new construction, I must have exited out of it, but new construction were at their peaks right during the pandemic. That's when the most new construction homes were being sold. And if we go back over here, if we go to a 5-year chart for KB homes and a 5-year to Lennar, if we go back to 2021, we see right here, this was when there was the most new construction being sold here in a very, very long time, the most new construction homes being sold, and yet we have higher stock prices right now than we did during those peak sales that we had in 2020 and 2021 during those lockdowns of new construction. Isn't that crazy? I mean, how do we have the stock going up substantially? I mean, just look at this graph, substantial increases in the stock's price, yet the sales are going down, prices are going down, they're missing their orders, they're missing their quarterly earnings, and yet they are higher than they were at the peak of the lockdowns during the pandemic. I mean, make it make sense, right? And again, the amount of money that they are printing, and if we don't see a recession to start the year, they increased that loan limit. I covered this in a previous video. Increased the loan limits another $50,000, so from $766,000 to about $802,000, $804,000 once it becomes official. FHA loan limits, which are supposed to be a percentage of conforming conventional loan limits, areas like Salt Lake or Austin and these other areas that are more expensive, they've actually increased FHA limits to essentially almost match what conventional conforming loan limits are. I mean, they're only a little bit less depending on the county, depending on what the median price is. For example, here we have some counties that have FHA where somebody with a 580 credit score can buy a house upwards of in the 700,000s. And that's essentially almost matching what the conforming loan limits are, which again is pretty wild. I mean, it's just the amount of debt the amount of money that's being printed, the amount of debt's being thrown on the U.S., the people of the U.S., it's mind-boggling. And of course, I keep showing this, but I mean, it's just the truth. I mean, so either the bubble is getting bigger, or they are trying to destroy the middle class. And we see that after the rate cut, right here, after the rate cut, they thought that interest rates would be going down, yet look at the 10-year. Right here when they did the Fed rate cut, oh, I'm actually blocking that, the Fed rate cut, the 10-year has actually been going up because they're worried that inflation might be coming back. And then look at what's happened with the interest rate. It's almost back to 7%, yet the Fed did a cut. Now, if the Fed does a pause here in November, and they're also saying that if the former President Trump wins the presidency, that the 10-year is actually going to go up. They think inflation is going to go up, which would actually cause interest rates to potentially go back up above 7% and maybe even 8%. You can just tell that nothing is going on. And in the previous video, I covered that both Kamala Harris and Donald Trump are going to add more to the national debt than what Biden did this year in 2024, which was the third highest year, adding to the national debt of $1.8 trillion. That means both presidents are on path in 2025 to do worse than that, which again is essentially just going to make this graph bigger with the amount of debt that, again, either this bubble is getting bigger or they're going to kill and destroy the middle class. Nobody cares about the middle class. The national debt isn't even something that's being talked about anymore. Both the Republican and Democrat Party have since 2022 pushed the national debt ceiling into 2023, 2024, and 2025. Don't even want to talk about it right now. It's not in anybody's mind. They don't even want to solve the issues. Well, one day it's either going to destroy the middle class or it will pop. It'll pop the bubble. So again, I've been saying in the short run, right here, if we take a look, inventory has been increasing. So the blue line is 2024 compared to 2023. However, under contract, also blue line is 2024, orange line is 2023. Under contracts are also increasing. And I've been saying that inventory was going to grow, and it has, as we're seeing here. And at the end of the year, you're going to get your best deals. And I am seeing that. I am helping people take advantage of that. And these people that I have under contract or have closed here recently, they've seen that the houses have dropped in value compared to a couple of, 6 months ago in the spring, beginning of summer. They're seeing that the deals are much better. Now, if you want to see how this thing's going to unravel, it could potentially be another 12 or 15-month wait. So you have to ask yourself, do you want to wait? Do you want to see how this thing unravels? And how long are you willing to wait? If you're looking to buy in a short run, you're saying, hey, I'm probably going to buy here in the next 3 months, 6 months. November and December, potentially January, could be your best months, as we are seeing loan limits increasing. We're seeing under contracts increasing. We do see that inventory is much bigger. Now, I'm not saying there's going to be bidding wars everywhere. Prices are going to go up $100,000. In order for that to happen, we would have to have interest rates drop down. We'd have to have inventory go back to extremely low limits. I mean, right now we're at over 11,000. We're going to start the year at probably over 8,000 in 2021. And in January 2022, we had 2,000 units. So we're nowhere near that. We see under contracts, yet those under contracts are way below the pandemic under contracts. And under contracts at this time of year, if we're comparing to 2019, was almost 6,000. Yet right here, we're at I believe 4,200. So we're still way below even in the normal last pre-pandemic year of 2019. But if you see, things are all over the place. Either the middle class is just going to get wiped out or be extremely, extremely small, or this bubble is getting bigger and bigger. And the question is it going to pop? Make sure that you subscribe. These videos are going to keep coming. If you do need a realtor in Utah, remember, Dinko the Realtor has your back. My contact information is down below.